Good morning, traders. Chris Bus here with Traders Profit Compass with another edition of Before the Bell for Wednesday, September 21st, 6:57 a.m. as I'm starting the video, and you know what to do. Run that player at 1.5x. First off, got to get the most important stuff out of the way, and that is wishing my daughter Lauren a happy 30th birthday today. She talked to her last night. She is living in Atlanta, setting the world on fire. Very proud of her, doing a great job, and wish her all the best today. So, and as a fun fact, born exactly 1 month after Hurricane Andrew devastated Homestead, Florida. She'll be forever linked to that significant event in our lives. So, moving on to the markets, we've got Vladimir Putin making big noises over in Russia, announcing the partial mobilization of troops and resources for his Ukraine effort. And I'm not going to get too far out of my lane on, global geopolitics, but I think he remains a big wild card out there. And the reason I say that is, things haven't been going particularly well for him in Ukraine. He's got a lot, very much emotionally invested in it. And when you get an egomaniac backed into a corner, those guys usually don't take losing lightly. Like, I don't think there's going to be a day, oh, you're right, guys, there was a big mistake, we're just going to pull back and act like it never happened. I think if things get worse, he's going to go to more drastic measures, kind of like a kamikaze run. The guy's 75 years old, one last, I'll take everybody out kind of mentality, no matter if it's good for Russia or whatever. So I think that remains a wild card. Maybe that's a 1% kind of thing. But like I said, guys like that don't usually take public humiliation very well. So I would not expect things to just kind of die down and declare the war is over kind of thing. I think it's going to be a long slog. Also, news out today also that Germany has had to nationalize one of its larger utility companies to the tune of $8 billion. You may see more of that coming as these energy prices go wild over in Europe. UK is also out today with, I don't know the specifics of it, but making moves to cap energy rates to businesses for a certain period of time at a certain level. And of course, when you cap rates, all that means is somebody's going to suffer, right? Either the government pays the difference of what the rates really ought to be, or the utility company has to eat it, which makes them lose money, and then they got to be nationalized. So real mess over in Europe. I think you're going to see Germany trade down today. We'll have to wait and see. Of course, with the Putin announcement, oil and natural gas are up about 2.5%. The rest of equities more or less in a holding pattern today ahead of Chair Powell. Rate announcement at 2 p.m. today with the written statement, and then, of course, at 2:30 with the presser, which will probably be the most significant part of the announcement. It's widely expected that he's going to go 75 basis points. I think a 100 basis point thing would be a hawkish surprise. And the thing about these announcements, and the thing I want to drive home to you, as always, is if I told you right now exactly what was going to happen at 2:30, 2 o'clock, 2:30, with the rate announcement and exactly what he was going to say, and ask you to put on a trade, you'd have no idea whether it was going to be higher, if the market was going to be higher or lower. So it is a 100% flip of the coin. Do not get wrapped up in narratives, what FinTwit is saying, what Financial TV is saying. Remember, the first move is usually fake, and then it could be a fake of the fake, right? So, there's this big spike down, and then, a half hour, at 2 o'clock, a giant spike down, the world is ending. Then he starts talking, there's a moonshot, and then tomorrow they rip it back the other way, or it could be totally reversed. So what I'm saying is that you have absolutely no edge, no idea what's going to happen, and caution is warranted, because you can quickly find yourself on the wrong side of the whole thing 10 minutes after you take a position. So best to just let the thing play out, probably the rest of the day and even into tomorrow and Friday. The volatility will dampen out, but I don't think we're going to know, major direction for at least a day, and maybe, through the end of the week. We'll have to see how it plays out, but just, keep that in mind when you're approaching your positions today. So let's get into the charts. Dollar holding the breakout. You're probably going to see that go higher today, just because of Putin. The euro is taking a dump right now because of all the stuff in Germany. So I wouldn't be surprised if the dollar makes a move higher today. As we move on to TLT, what I've got here, I showed you, we've been focused on the daily chart, but I want to show you the weekly chart here of TLT. And this goes back, this is a 5-year chart going back into 2017. And you can see right here at 105, those were the lows, 5 years ago. So we are right on the edge of, nothingness as far as TLT goes. I do want to point out that we've got positive divergence on this chart and also the daily chart. So we got a lower low in price, but with rising PPO momentum and rising RSI. So the conditions are set for a move higher. Now you'll notice we got a high volume over price bar here at 110. I think that has the potential to contain any move. But if you're, let's go back and look at the daily chart just here for a second. So some of you have been riding this thing all the way down. Maybe you took profits here at 108. Maybe you reestablished a position on that break of 108, and then yesterday you got a move down into the low 105s. Now it did come back. So you're going to have to decide today, before the Fed announcement, how you're going to handle that position. Obviously, anything with the rates is going to be subject to volatility with the Fed announcement. So if you're sitting on a profit right now, you'll have to decide, are you happy taking that profit and just taking it off and then see how the dust settles? Or are you going to roll the dice and, hope for a plunge that takes it lower? I can't make that call for you. That'll have a lot to do with how you're sized on the thing. Your thoughts on the matter. Whether you prefer one in the hand or two in the bush, that kind of thing. So just keep in mind that you're going to see some wild variations, I would imagine, in TLT after that rate announcement. VIX is still contained between 25 and 29. You're going to see this thing go wild, on the Fed announcement, depending on what happens with equities. I would just focus on 29 and 25, keeping in mind that there's going to be a wild spike, I would imagine, in one or the other direction, and then we'll have to see, if it clears 29.30, then we're going to have a level of support in the VIX, which would lend itself to lower equity prices. Bitcoin just wrestling here with 19,000. And so this, along with a lot of other stocks, are just oscillating at a point where it could go either way. Either a decisive breakdown or a break higher, but definitely sitting right on the pivot point for Bitcoin. Oil was down yesterday, but up again today. You're right here at that pivot that we discussed at 85, with a low end of the range at 82 and the high end of the range at around 88. So keep that in mind if you're actively trading oil. Now, some of us have ag commodities on, and they had a strong day yesterday, and they're up again this morning. Of course, that's Putin related. But here on corn, I think a lot of us are in October 27. Keep in mind that there's significant resistance at 28.5. If there was a push up to that level, not necessarily today, that would be, a really big move today, but this week or in the next week, if there's a push up to 28.5, I would be taking that position off and then recalibrating recalibrating around that 28.5 pivot. A break above would get you back into this value range with a target at 30 at the prior highs, but I wouldn't be surprised if it came right into 28.50 and then had a reaction back, just a reflexive sell bar, and then we'll see if it comes back up and breaks out. Same kind of idea in wheat. Big move yesterday, 6.5%. I think a lot of us are in October 9. I think the most important thing here is that break above the 200 with authority. We came up here, hit our head, came back, hit our head, deeper pullback, and then got the moonshot yesterday. So I think this will be the decision zone, or it gets a lot harder up towards 930 into 975. You'll see there was a reach up here. There was some traffic in through here. Really at 975 is the real, I would say, the more significant level of resistance. but we'll have to pay attention if and when price got up into 930, I would say. And I mentioned EWG, Germany. We're right on the raggedy edge of nothingness here. We had a big down week last week, and now with the Putin tensions and obvious problems with energy, nationalization of that utility company, I would expect this to make some kind of move down. And then if this 2150 area is broken on a weekly closing basis Friday, then the door would be open, and then this 21.5 will of course become resistance on any up move. So we'll have to see how that plays out. Really, the position has not really paid anything yet. We're probably up a little bit, but nothing that's going to make us rich. But if there's a big down move, then you can see that the volume over price support falls away, and then you've kind of got the COVID lows at least open if it wants to go there. NYMO getting down to oversold at minus 62. Here you got to be real cautious, as we've discussed ad nauseum. Your risk reward starts to diminish here for maintaining short positions. Now, with that said, a super bearish reaction out of the Fed will just blow this oscillator out. It's not like this is guaranteed to bounce here. And so just be aware of it as the Fed reaction unfolds over the next couple of days, that for instance, if it moves down into this minus 80, minus 90, we'll be back into this zone here where the probability tremendously increases for a bounce. Same kind of thoughts for the NASDAQ, but not quite to the extreme that we see on the NYMO. So keep these oscillators in mind as we head down towards oversold. Yesterday, down day, we had this bounce, then dropped back down. We're below this 385, wrestling with that level. As I still maintain that below 390, SPY remains very, very vulnerable to making a move lower. And you can see here the volume over price has or falls away significantly under 385. So you've got that to work as a pivot today if you decide to actively trade ahead of the Fed. And then here's the zoom in. You've got 386 here with a little gap above to fill, and you've got the lows down here at 381 and a half. Now, what I wanted to show you is on a lot of these charts, even if I don't particularly call it out or forget to, notice you got positive divergence here on this low. So you got a lower low, but a higher low in momentum and a higher low in RSI. So, the conditions are there for a bounce, maybe come up and fill this level, get back up to 390, and then, there'll be a moment of truth with that big pivot and, the downtrend line. QQQ still holding this 385 kind of last stop level, at least in my mind. Got to hold that, but really to get back on track, got to get back above 295 here, where we had that major pivot. This line of a lot of reactions along that line. I still have that as my major pivot. And you can see, again, we've made mention of it. Price way below all the moving averages, not looking very good at all, actually. And here on the 1 hour chart, again, notice the bullish divergences on PPO and RSI. We've got, you may want to call that, a double bottom low. Almost got down there for that touch, didn't quite make it. We had a good early morning session where yesterday price rallied up into this 292 area, which, as you'll recall, yesterday we said it would get harder there, and it did. It came up again and then fell apart. You've got this level here, support, and then you got all this becoming resistance above. So keep that 292 level in mind. IWM, another look below this main pivot at 178. I think it's clear as day. 178 is your pivot for IWM. Below that, then there's a last stop here towards 175, and then you got an open gap and another high volume over price bar. But here too, even though it's above the pivot, well below all the moving averages that are pointed down, I think that 178 is going to be an important level to hold. And say, so in your trading, because this particular index is right at that main pivot, I think if you wanted to do, in the next day or so, depending on what happens, all that kind of stuff, if there's a break below 178 that sticks, then you can be short against 178 and see if there isn't a pronounced move, down into the low 170s, and even potentially to tag that June low if things really fall apart, because you've got a very, very well-defined level here at 178 that you can shoot against on the downside if, in fact, we make a sharp break lower. And here, too, you've got, we did have the double bottom low here with bullish divergence. That normally is a, money setup for a long, but, we've had bearish conditions, and what you often see in bearish conditions is that bullish setups fail. It's the same thing in reverse when you've got a bullish chart and then you get a bearish signal and it fails, right? You get a fake breakdown and, you're getting short because you've got bearish divergences, etc., and then they just get burned through. So what could very easily happen here after the Fed is this just, rolls back over, and this rolls over as well, and then that bullish divergence, disappears in a heartbeat. So be aware of the condition, but be aware of the overall situation. And you've got levels to shoot against. For instance, here, a break below 177, these indicators will follow price. So then that opens up, 174 and 172 as we've discussed. Meta, our main pivot is 150 on this chart. As we've discussed on the daily chart, anything below 150, this goes lower. We can show that again real quick. Here's our measured move down to 140, but then we've got the COVID low right at 138, right in that area. So until this gets above, well, actually here I've got it at 155 as the level to recover. I have to go back and look at this 60-minute chart. Yeah. Okay, here. I think 150 would be significant. You can see this flag type setup here. That would be a first move. But on the daily chart, got to get back above 155. Beg my pardon on that. I had the levels messed up. So on a bullish move, 150, then 155 to get on much firmer footing. Now, Apple had a really nice day yesterday, up 1.57%. It was up even higher. Really nice run off of this divergent low, right? Lower low, but higher low in RSI and PPO. Got a really nice run. And actually, yesterday we talked about 154. So early in the session, what was the low? Low was 153. So on that 154 reclaim yesterday, you had a really nice trade up to, it peaked out at about 157.50, right in that area. Then, of course, it came back, but there was certainly a nice long trade to make on that reclaim of 154 on the way up. So now, this level here actually should be green. That 154 is now support. So as long as Apple can hold 154, that uptrend will stay intact. Showing a lot of relative strength over the last week or so. Same thing with Tesla. What I've done is put in an uptrend line. Even yesterday, we managed to put in a higher high. Actually, I was really hopeful right here. You can see 312 took out this prior high, and the door was open for a move higher, but then they pulled it back to trend. So I think you can use this uptrend line as a gauge in your trading. As long as it can hold that level, then the longs or the bulls are certainly still in charge. And you've got a pretty big line of support here, right at 306, 307. You notice all these highs here were resistance, and all these lows here are support. So, any pullback that's contained between like 307, 306, I think is buyable. It gets a little more dicey if you break the uptrend line and then start losing these levels from above. Then you probably see the market heading down if that were the case. Microsoft, really has nothing going on positive. The only thing I can say for the bulls is they've managed to hold it right in this 242 area. You can see the bullish divergence, right? Equal lows, but with rising momentum and rising RSI, you do have an objective trade to be long against 242, but on any break of that, you got to get out fast and look to the downside, at least the way I see it, because you had a fast move down. Now this is consolidating. I can certainly see a break of 242, taking it down to 235 relatively quickly. Amazon made some noise early in the session, came right back to the lows. Any break of 121, I think, is a nice short. Probably going to go right down to 117 pretty quickly. Test the top of this gap. Probably get a reaction there. You know, first touch of the gap is usually bought. And then they bring it back down and fill it. So keep that in mind. Also, if there's a positive move, you've got an open, you still got more room to go to fill this gap up to 126. But then you've got a big line of resistance right here with all these lows. You got lows here that were support, and then, you know, the bottom fell out. So when this makes a move back up to 126, you know, if you were to buy it on the recapture of 123 and you got that $3, I'd be taking it off and then watching carefully if there's a rejection at 126 to get short again, or if there's a breakout there, then your target would be 129.50 at the top of this trading range. Google looks a lot like Microsoft. I mean, absolutely nothing going on. We had the move down. Now it's been basically just oscillating in a $1.50 range between 103 and 101.50, and actually it broke below, could not even get back above that 101.50. So I think that's your pivot going forward. But really, I mean, you do have the positive divergence that is showing up on a lot of charts, but very, very weak price action. And remember, from the daily chart, our target is 91.50. So still, on a measured move basis, you still got $10 to go on the downside. Netflix had a big early morning move, basically to double tap this prior high up at 251.50, and then it let go. So potential for a double top here. Still good relative strength in terms of Netflix. I mean, this looks a lot like Apple, looks a lot like Tesla, whereas you've got, you know, Meta, Google, Microsoft basically eating it, you know, can't get anything going, while here you've got a series of higher highs and higher lows working. And as we've speculated, you know, somebody out there seems to be accumulating the stock, given its price action compared to everybody else. So today and going forward, I think you've got a nice support zone here between 238 and 240. You get any kind of pullback into those regions, I think it's buyable. if you lose 238, then you got to start being, relatively concerned that, the whole thing is going to roll over at that point. SMH, just oscillating. We do have the bullish divergence like on a lot of other charts. I think it's got to break above 204 to open up the door to 208, but anything below 200, we showed on the daily chart that you've got this bear trap low down at 190 that remains, technically open as long as price stays below 204, right? This was the trading range. A break above 204 that sticks would be important bullishly. Why? Because you're entering back into this old trading range with a gap to fill. Your target would be 211 for starters, but then 218 at the top of the range if this were to make a bull move. But until it does, resistance is resistance, and unless and until broken. And as it stands now, the door is open to come back and test this low here at 190. ARC more or less underperformed to the downside yesterday, down 2.6%. You're right here at the pivot point of ARC F at 1675, 1685. A break here, I would imagine probably a quick move down to the bottom of the box. ARC G testing the bottom of the box. I'd have an alarm at 34. If you got a break there, I think you're going to come to 31 relatively quickly. Flagship, same deal. Have your alarm at 40, 41, depending on when you want to get involved. But a break there would open up these prior lows down towards 36, 36.50, right in that range. And then ARC W is working its way down, certainly to test this low at 49, but then you've got prior lows at 46. Now, coming out of the Fed, if you get to the point, where you want to take a position on the short side, I think, as we've said all along, these ARC names are going to give you, if you get the direction right, ARC is going to give you more horsepower to the downside on any kind of mega move in equities. And I still am of the belief that this rising rate environment is going to be really, really hard on the bubble, Ponzi, unprofitable stocks that still have, relatively speaking, of course they've come down a lot, but they're still expensive. It's not like they're now they're dirt cheap. They're not. They're still relatively expensive. And if rates do a moonshot and equities react negatively to that, then I think you don't have to go gonzo, but if you're going to short something, I think, at least have a position or two in, your ARC name of choice, for that ride down. And I think you would be pretty pleased if, in the results, if QQQ is down 2%, ARC is going to be down 4 or 5%. So I think that's where you get that outperformance on the downside. So let's wrap it up there. Don't try to be a hero today on the FOMC. Just remember, all the talking heads, they have no idea, just like you don't have any idea what's going to happen. Everything may go exactly as planned. With the FOMC, you get the 75 bips, blah, blah, blah. It could either do a moonshot or a nosedive, and then 15 minutes, a half hour later, they rip it the other way. Don't get caught in that mess. Just step aside and wait till the vol dies out, then cautiously take your positions. And as a side note, I just realized that I've got an appointment today at 3:15. You make these appointments 6 months ago, not having the Fed calendar in front of you. So I'm gonna be stepping out of the office at that time. It may be a blessing in disguise. It won't tempt me to do something stupid after the Fed reaction. So I'll come back after the close, see how the dust settles, and take it from there. So I hope you got something good out of the video. Good luck in your trading today. And we'll see what happens. This has been Chris Buss with Traders Profit Compass. Talk to you next time.